Hey everybody, welcome. Dave Bartosiak here with Zacks.com, and we're here for another live earnings preview. It's the only one we're going to do this week, and this time it's going to be Ulta. So I've talked about Ulta in the past. I was just on Bloomberg last week talking about Ulta, put together a trade for you there. So you're going to see something a little bit similar. The stock has just flat out been a beast. There's no other way to play it. I know that a lot of people that I know enjoy shopping at Ulta. It's got all your beauty products and cologne and perfume and hair moisturizer and all sorts of stuff. I guess they call that conditioner. I wouldn't know because I'm bald. But I do get my beard oil from there, so they are pretty cool. Ulta's okay in my book. I know my girlfriend likes shopping there. But nobody really cares about that story. The real story is the growth story here with shares of Ulta. So you're going to see here in a little bit how the numbers have just been spectacular year over year, quarter over quarter. And last quarter, what made the stock just spike so spectacularly is it ended up getting something like 15.1% same-store sales growth, which was absolutely phenomenal. So not only is the company being aggressive and adding locations and growing, but they're starting to really get some nice profits from their existing locations, a lot of growth there. And in a backdrop of retail just not doing all that fantastic, having Ulta there is definitely a breath of fresh air. Now, the other thing with Ulta is that really what they're trying to do is they're trying to get that percentage of the wallet that's running off and going to the CVS's and the Walmarts of the world. Rather than have you go there, they want you to go into Ulta. This way you'll have a nicer selection. You'll be able to buy their products, some higher end products that you're just simply not going to find in the CVS's and the Walgreens of the world. So they got you going there, which is fantastic. They also have a customer loyalty program that they've unveiled that's been very successful for them. So they're hoping that that's going to continue over the course of the next quarter and beyond. So we're going to go ahead and start this like we start every single one of these, and that's by digging into our price, consensus, and EPS surprise chart we have here on Zacks.com. So if you take a look at the black line here, that represents the price. The black line on the chart is the price. The right y-axis, you can see the actual dollar amount value for that. The little green numbers represent earnings beats and misses, kind of quarter over quarter, okay? And then you see the multicolored lines here. This is the evolution of the Zacks consensus estimate over time. So you can see why the stock has done so well as these estimates have continued to go up, and you see kind of these growth numbers. And most recently, you have this acceleration, not just of the stock price, but also of these earnings estimates. That's really where the stock kind of popped up on the radar for a lot of people, was these last couple earnings reports where it broke out of these doldrums and really went aggressively to the upside. You can see it was trading about $1.87 2 quarters ago before earnings, and it's since spiked $2.75. I believe we're just under $2.75 today, or at $2.75. So $2.75 on the money here for shares of Ulta. Some good beats. Nice beat last time. Beat. I mean, they haven't disappointed since December of 2013, and even that was just a small miss. So a good story here, but here's something we got to watch out for, okay? When these stocks are very growthy, so to speak, you have these lofty expectations quarter over quarter that they're going to continue at this pace, maybe even get even better. What happens is you get a nice little growth premium that's priced in, okay? The valuations go a little out of whack, out of sorts. They just become high, okay? I don't want to say out of whack. Let me kind of scale that back. The valuations just become much higher than you would see in stocks where you're not going to have that growth component, right? But quarter after quarter, the company then has to keep on satisfying these expectations for growth. And if they don't, if there's even just a little blip, a little hint that growth might be slowing, these things end up getting slammed. So it's definitely a high risk, high reward type of scenario when you're talking about flat out going long or flat out going short on a position like this. So let's take a look and see exactly what sort of estimates we're looking at, what our Zacks rank is here on Zacks.com. So we've got Ulta as a Zacks rank number 2 buy right now, okay? Growth style score of A, a momentum style score of A for a VGM score of B. Now they're going to report after the market closes tomorrow, so I wanted to give you kind of an extra day to go ahead, ahead of this Now, if you look at the magnitude of these earnings estimates, we can see that in the current quarter, they've gone from $1.40 to $1.38 up to $1.39. So a little bit of movement there. If you look at next quarter's numbers, they've actually dipped from 131 to 129. But really, the magic is here in the current year and next year numbers. So 90 days ago, analysts were looking for $5.95 out of shares of Ulta. Today, we're looking for $6.15. If you look at next year's numbers, 90 days ago, $7.22. And now the current estimate's calling for $7.51. So you can also see the huge jump in EPS from 1 year to the next. Okay. Then if we look at our surprise history, you can see we've had some recent surprises that have been very nice. Last quarter, a 16-cent beat with EPS coming in at $1.45 versus estimates of $1.29. The quarter before, a 15-cent beat coming in at $1.69 versus expectations for $1.54, and so on and so forth. We got a 6-cent beat the quarter before that and 4 cents before that. So they do a pretty good job of beating estimates. So that's not going to be what everybody's looking for here, okay? We're basically expecting a beat out of Ulta. So obviously that's going to bring us some risk to the downside. But even a beat is not going to be enough. You're really going to need to dig down and look at this kind of quarter-over-quarter growth number and what the same-store sales are. Everybody went bananas for that 15.1% same-store sale. It might have been 15.2, actually, and I'm looking down here. 15.2% growth, same-store sales. That's what we're talking about. So that's really what is going to be the highlight of this report when it comes out after the market closes tomorrow. Okay, now, how are we going to go ahead and play this trade? What we're going to do is we're going to dig into the options chain, this time on Yahoo Finance. I'm going to take a look and see what a good bullish trade would be, what a good bearish trade would be, and I'm going to give you an idea of what I believe the best trade is going to be for shares of Ulta. Now, we've been on one heck of a heater here, so let's hope that this can continue. So here we are on the options chain here, August 26th. I just like to look at the front week, right? So this is going to expire the day after Ulta reports their earnings, on Thursday. So I look at the straddle view. This gives me calls on the left side, puts on the right. So what I always do is I go to the at the money call and puts, open up my calendar, and I take a look at the 275 at the money call right now is $9.99. And the at the money put just traded for $10.13. So the market's expecting a little over a $20 move here in shares of Ulta. Divide that by the current stock price of $275. Oops, sorry, $275. You're talking a 7.3% expected move for shares of Ulta here. Now that seems like a decent amount. You gotta realize that the stock has moved pretty considerably over the course of the last couple of weeks. Even last week, when I was talking about putting a trade on Ulta, shares were at like 265, and now already we're up to 275. So it's added 4%, $10 in the medium term right there. So for this to still be pricing in a 7% move here in the market, that's a healthy amount, okay? And so keep that in mind when we're putting together a bullish or a bearish trade on this one. So I think you will see sort of an immediate reaction in this stock going one way or the other. The question is just, how strong is this move going to be? So what I'm going to do here is I'm going to go out on this options chain rather than being stuck just in this front week. I want to give this a little bit more time to move, okay? So I'm actually going to go all the way out till October as I put together this long bullish trade and the long bearish trade and let you make the decision. This way, it'll give the market some time to go ahead and kind of, move itself in one direction, following up on the earnings report. I'm not locked in where it has to happen that day right away. Something has to move quickly because, you're only going to have one day of the market reacting to this. And sometimes it doesn't always react in the direction of these earnings, okay? It just doesn't. It just has a mind of its own, okay? So I want to give it a little bit more time. So that means I'm going to be paying a little bit more on the long side of this call or the long side of this put. But that's okay, because there's a way that I could do that and still take care of business. So going out to October, this is something I want to point out, folks. You go out here because it makes sense. It's going to give you a little bit more time. The stock can move a little bit. But then you start digging into some of these numbers, right? There hasn't really been a lot of trades taking place here. See, this is the volume here. Only 30 contracts, 8 contracts, 9 contracts, 7 contracts, 4 contracts, with the open interest being very low. So I'm just not comfortable coming into a situation where there's that low of open interest there. It just means that those options aren't really all that liquid right now. So let's go a little further out even. So let's even take a look at the December 16, 2016 calls. So now you're probably going to have another quarter of earnings. So if you're really going to make a call in one direction or the other on this company, this might be a little better off. And for sure, we do have nice, a little bit healthier areas here of open interest, right? Now, the contracts with the most open interest are going to be the at-the-money call, the ones that are going to expire the front week or the front month, okay? So this is the September contract is going to be probably a little bit more active. That August 26 contract is going to be more active, but I'm just not comfortable dipping in there with those super low numbers. I mean, some of these is like 1 or 2 contracts traded there, and that's the total open interest. I need a little bit more than that, okay? So now getting back to this call spread that I want to put on here on shares of Ulta. So again, we're going all the way out to December, so that's giving us a lot of time. So if your underlying thesis is that you're pretty bullish on shares of Ulta, you should be comfortable with looking at something like this. So I'm going to take a look at, and you'll notice that these are going to be on the whole a little bit more expensive because it's a price of your stock, $270 stock. Obviously, these options are going to move a lot more, and they're going to be a little bit more expensive. So if you look at the 270 call, right, that's going to cost me $21.20 to put on, okay? And if I'm bullish on this stock, remember we're talking about a $20 move is kind of what we're comfortable with. So I think I would be good with this 290. Selling that 290 call. So now take that 21.20, subtract the 13.20, selling that call. That's $8. So the way that this trade is going to work, I'm going to put up $8 with the chance to make $12 on this trade. Now, how am I going to make that? If shares of Ulta close above $290 at expiration at the end of December, I'm going to end up pocketing all that money. So that's a 150% gain that I can make on shares of Ulta if it closes above $290 per share at expiration at the end of December, okay? Now, it does seem a long way off, and $20 seems like a lot of money, but not when you're dealing with a stock that already has a $20 move priced in on earnings here, okay? Buying a little bit more time. The only way you're really going to get that whole 150% is if you hold it for that whole period of time and it ends up closing above that amount. But what you'll see is if this spikes one way or the other tomorrow, you're still going to make a few bucks, okay? Still be able to make some money on this trade. So that's the bull case. Now let's take a look at the bearish case. Again, I'm going to stick around in the same month because I think it'll be it's going to take a little bit for this to catch, right? It's not going to just happen right away. So I want to give it some time to start unwinding here. So here I'm going to look at the 275 and 255 call spread or put spread here, okay? So I'm going to buy the 275 put and I'm going to sell the 255 put. So the 275 is going to cost me $19.20 and I'm going to subtract the 255 price. That's $6.75. So this one's even nicer here. So still a $20 spread there from 275 to 255, right? But you're talking $13.25 to the upside potentially. So that's a much nicer trade. I almost triple up on this trade. You can almost triple up on this trade. 196% rate of return potentially. Now this is the thing. Shares of Ulta would have to close in December, at the end of December, under $255 per share for that to go ahead and pan out. The other thing is, this is only showing the last trade data. I'd have to see our bid and the ask, but that's going to change a little bit later on today. Obviously, every second is going to change, and into tomorrow. So the prices tomorrow might be a little bit different here. I'd suspect that gets a little bit closer to probably closer to $10.50 or $11 by tomorrow, I suspect. So that's going to cut into the profits a little bit, but that's just something to keep an eye on. All right, so bullish or bearish, those are the two cases, but I'm not going to be bullish or bearish on this stock, okay? I'm going to play this a little bit differently. And for this, we're going to head right back into the August 26th, 2006 contract. This is the one that's going to expire the day after. I'm not going to be long here. I'm going to be short on both sides of this. So essentially what I'm doing is I'm thinking that this $20 spread that they have baked in is a little bit overcooked. I don't think it's going to move that much, okay? So what I'm going to do is I'm going to reach into my bag of tricks and I'm going to put on my iron condor here, okay? So essentially what I'm going to be doing is I'm going to sell an out-of-the-money call spread and an out-of-the-money put spread on shares of Ulta. Now, when I did this on Bloomberg last week, the numbers were a little bit different, okay? The stock was trading at 265, and I believe I went with the 245, 240 call spread on the 245, 235, I think, on the bottom end, maybe 250, 240, something like that. I went a little further out, so I have to adjust this here, I guess, is the bottom line here today without getting too confusing. So again, we're going to look at the at-the-money, the front month spread here. So get down here to 275. Remember, I wanted to add 20 bucks, so that takes me to 295, okay? So what I'm going to do is I'm going to sell the 295 call, okay? At the same time, I'm going to buy the 305. So I'm going to be long the 305 call. Okay. So the 295 is going to cost me $2. I'm going to get $2.68 from that. And I'm going to buy that 305. So that's 141 in premium I'm going to take in on that end. Okay. Now that's only one half of the trade. Okay. The other half of the trade is I have to sell a put spread. So again, we're going to go 20 bucks out of the money. So that's going to take me to the 255. So I'm going to sell the 255 put, and I'm going to go long the 245 put. So the 255 put, I get 305. And then buying the 245 is going to cost me 160. So that's 145. Okay. So now the most money I can make on this trade is 286. $286. So if you go ahead and subtract that from the 10 bucks, you got 714 at risk, okay? So this is how this plays out, okay? It's a little bit more complicated. Essentially what I've done is I've put these two blinders on shares of Ulta. So as long as on Friday, Ulta closes below $295 and above $255, I will make all of that $2.86, okay? That will all go into my pocket. So we got a pretty wide spread there, okay? As long as it doesn't go past either way, I'm just gonna collect that money, okay? Now what I have at risk is this $7.14 essentially, right? Because if it runs up in my face, if this ends up closing above 305 or below 245, that's going to be my max loss. Now, the reason why I do this iron condor style is because I want to limit what my max loss is, right? If I just went ahead and shorted the at-the-money call and the at-the-money put, then I'm on the hook for everything that might happen to this, okay? So if the stock goes to 200, I'm on the hook for the difference between my strike price and 200. Okay, that's a lot of money. So I'm not that confident in my options trading abilities. And even if I was, it's just unnecessary risk as far as I'm concerned. This way, the risk is a lot lower. My odds of winning are a lot higher. And I know exactly how much I have to lose. So in this case, I do have $7.14 to lose, but I got $2.86 that I could potentially win. So in that case, I'm looking at sort of a risk to reward situation where I could make 40% essentially, right? So it's not as fantastic as when you're swinging for the fences on these call spreads and they work out. Or when you're swinging on the put spreads and they work out. And obviously it's not as good as my bullish trade nor my bearish trade where we were over more than doubling up on both of them. But I think I have a much higher likelihood of success putting this trade together given what the current scenario is. Now the hope is that this is another winner for us. We had 3 winners in a row 2 weeks ago, 3 winners in a row last week. So I'm on a little bit of a heater now. Could this be lucky number 7? I don't know. We're going to have to find out. And again, remember, as earnings season comes back in a full gear in a few weeks, in a month or so, I guess it'll be a month and a half. I'm getting ahead of myself. As we get back into full swing, what I'm looking to do is I'm looking to have this service, but then I'm going to go ahead and I'm going to follow up the next day after I've put my trade on. I want to share with you how exactly I'm getting out of these trades. That way you could see kind of soup to nuts how all of this is done. That's going to be part of our Zacks live trader service. Haven't done it yet, haven't launched it yet because we just don't have the activity yet, right? I want to make sure there's something that we can trade each and every week that we could get excited about. So next week we're definitely going to have a name that's going to be spectacular that we're going to go ahead and try and trade. So chime in the comment section below. Let me know what company next week you'd like to hear me talk about. And heck, maybe we'll do it because we're open to suggestions. We really don't figure out what we're going to do the following week until about Monday of that week. So we've got a lot of flexibility. We love it when you guys chime in. Let me know what happens. Let me know what works. Let me know if you won. Let me know if you lost. All the above. So for everybody here at Zacks.com, thanks so much for coming out, and I will see you all next week.